Hello, welcome to this episode of the podcast. Now, if you've been following me and listening to me for the 4 years that I've been doing this now, you know that pensions are one of the things that I'm extremely passionate about. And this stems back to the fact that my dad, in his late 50s, came home panicking once that he didn't have a pension to fund his retirement. And at the time, I was about 17, 18 years old. Didn't really understand what a pension was. It wasn't until in 2012 I started working in Canary Wharf that I realized, that's what my dad was talking about. And we've spoken a lot about pensions over the past year, certainly over the past 2-3 months though, certainly on YouTube, about the fact that it feels like the landscape is changing. You've heard news about the state pension age possibly being pushed backwards. And we might even be seeing maybe some changes later on this year. But what I want to do in this episode is actually talk to Nest pensions. Now, 13 million people have a Nest pension. If you work for an employee and Nest is the chosen administrator for that scheme, it is likely that you are indeed invested in a Nest pension. My company, my limited company, uses Nest as its provider for pensions. And so this is something that I feel like is really important to talk about, particularly now where we are in 2024 as we're recording this, and we don't know what changes are going to come down the track. So I've got a great guest. His name is Paul Todd. He is the Chief Operations Officer at Nest Invest, which is actually part of the Nest pension scheme. Paul, thank you so much for joining me. And yes, could you just give a bit of a brief introduction to you and what you do as the Chief Operations Officer at Nest Invest?
Great, thanks a lot, Peter, and it's great to be here. Nest is one of the pension schemes that any employer can use as part of new duties that came into force in 2012. And the aim of that was to get as many people in the UK saving for their pension to go alongside their state pension. And Nest is one of those things, one of those providers. And my role within Nest, I work in the investment function. So part of my job with the wider team is to help people get most from the contributions they make. So we're making decisions about where their money is invested. Basically the aim is to grow their money as fast as possible, so that over time they can grow a big pension pot. But the main aim is to get people having the highest possible income that they can get in retirement, so people have a better retirement and don't have to have that kind of fear of what happens when they're coming to the end of their working lives.
Yeah, I know that there's often a lot of confusion around pensions, let alone providers themselves. Can you give us I know you've already touched on it briefly there, but can you give us an overview of who Nest are and what you actually do in that management of a pension, as you're saying, trying to get people to save for retirement and grow their pot as quickly as possible?
Yeah, so a big part of what Nest does is we help people make contributions. So we work with over 1 million employers around the UK, and with those 1 million employers, we have 13 million people who are working and saving in the UK. Their contributions come through to us. It's all done online, so people can see where their contributions have come out and where they're going. And then the other big part of what Nest does is then kind of makes decisions about where's the best place to put that money, so we can grow people's pensions as fast as possible, but also in a sustainable manner. So we want to try and avoid people's money going up and down kind of really rapidly. But also we're really keen to make sure that when we invest in a responsible way. So thinking about broader things, about things like climate change, thinking about how employers treat their kind of workforce and things. So it's not just as simple as just sticking the money on the stock market. There's a lot of thought that's going into where that money can have most influence in terms of getting better outcomes for people in retirement, but also, ideally making a positive contribution to the planet that we're all going to retire into, and also kind of wider things about local economies and kind of workforce standards and things like that.
Yeah. We've touched a little bit on auto enrollment. And when auto enrollment came out, I was actually working for a pension provider in Canary Wharf. Can you talk a little bit about how auto enrollment has changed the pension landscape in the last decade or so? Because it was a pretty big move by the government back then to introduce this piece of legislation that has changed the way people are now interfacing and interacting with pensions, and the fact that more people, it seems, according to the data, are now, uh, saving into a pension for the future.
Yeah, it's been a huge thing in terms of kind of government sort of policy interventions. It's kind of one of the biggest success stories, I'd say, over the last 40 or 50 years. And I mean, the UK used to pride itself on having this really kind of great pension system. And I think that was true for those people who had access. But an enormous
Hmm.
part of the population just didn't have any access to pensions beyond what you would get from the state. And what was happening is it was getting much worse. So access was kind of reducing all through the sort of 90s and into the 2000s. And what automatic enrolment has done has kind of completely reversed that. So prior to automatic enrolment, over half the UK population just didn't have access to a pension scheme at all, let alone whether that was a good quality pension scheme. And now that figure is close to 80% now. So it's gone from being a minority sport having a pension to something that most people do have. But I think the genius of kind of automatic enrolment was that we didn't go down the route that what's happened in Australia, where it was made compulsory that everybody had to save, regardless of whether they thought it was suitable. Automatic enrolment gives people the opportunity to think about their own finances. So
Hmm.
if this isn't the right time for you to save, you can opt out or you can stop contributing. So it gives people that kind of flexibility. And what we've found is that people aren't really using that flexibility, but they really value the ability to have some flexibility, particularly if finances are tight at certain periods. Um, and the other key thing about automatic enrolment, it's not just your contributions. Your employer, by law, has to also make contributions. So leaving aside how much money we can make for you by investing well, you're getting all of this kind of extra money, basically as part of the kind of wage settlement that you've got with your employer. And as I said, it's just been very, very successful. People are very positive about kind of saving, and what we saw kind of before automatic enrolment came in was people said they really wanted to save for their retirement, but just felt they didn't quite know how or whether they were getting a good
Hmm.
deal. With automatic enrolment, it kind of places people into a workplace pension scheme, and there are standards set for that. So you can have confidence um, that there'll be minimum standards of what you should expect in terms of things like fees, but also kind of other kind of quality measures about how your pension's invested and what you should expect in terms of being communicated to. And it kind of like just turns it on your head, where it stops being a thing that you have to go kind of find something and work it out yourself, to it's being done for you through your employer, and then your choice is, do I want to continue with this, or do I want to pause for a period of time? And I think a lot of this came out of a lot of behavioural finance, where people like that nudge
Yeah.
about, they kind of
Yeah.
know what they want to do, but they don't know how to do it. So if somebody
Yeah.
can do it for you, that's great. But having that kind of agency that you can change your mind is a really powerful thing, and
Yeah.
and that seems to have worked pretty well so far.
Yeah. I was going to touch on that point actually, because it's the autonomy and the choice of, if you want to, you can opt out. I don't know. I feel like in modern society, people don't necessarily like being told what to do, or feel as though they don't have any control or agency over that choice. And I think with a success rate of 80%, I feel like having that choice, if it was run as an experiment and behavioral, finance kind of gives us the science behind it, I think you can't argue with that kind of stat, and the fact that agency allows people to take ownership and almost make the decision for themselves and feel empowered because they've made that decision as well. And that can't be overlooked or understated in any way. So how are Nest pensions actually invested? Because I think there's a lot of confusion around how pensions are invested, generally speaking, and you can get into the weeds on the detail of some of this. But just talk me through your approach at Nest in terms of how you invest people's money.
Yeah, so the starting point is for most people, unless you're only starting for the first time in your 60s or something. For most people, you've got a long time for your money to grow. So the approach to investment is very different when you've got a long-term investment horizon compared to you're just investing for the next 12 months or something. So one of the key things that we did at the beginning was we spent a lot of time looking at who our membership were likely to be and really trying to understand kind of socioeconomic characteristics about what people are likely to earn, what's their overall kind of wealth, and then try and develop an investment strategy that meets their needs, particularly at different stages in their life. But fundamentally, we're invested in all sorts of things. I mean, one of our key kind of approaches to investment is the importance of diversification. So you're not putting all of your money into a single thing that could go up or down. So we're invested in companies around the globe, so thousands of different businesses, and in particular, we have a lot of investments in tech companies in the US, which have grown phenomenally over the last 10 years. We also invest in things like fixed income, so that's debt and loans to kind of different companies, but also to governments. And increasingly, we're starting to put more of our money into real assets. So things like wind farms. We've got huge investments in kind of wind farms off the coast of England. Big kind of solar arrays in the UK and abroad. And as we've got bigger, so we started investing in 2011, 2012. The first contribution we invested was £20. There are limitations to how well you can kind of diversify that. But now we're at over 40 billion in assets under management. We're taking £500 million every single month is coming in from member and employer contributions. So we've just got loads more opportunities to invest in kind of great in great investments around the globe. But increasingly, we're really thinking hard about how we invest in the UK as well, and investments that will generate good returns, but will also have a positive impact on communities and companies in the UK. Because if we can grow the UK economy or contribute to that has additional kind of benefits rather than just good returns for later life, but it's also giving kind of real kind of tangible results to people kind of right now as well. And that was something that we couldn't do 10 years ago when we were still relatively small. But the kind of benefits of scale and being able to negotiate really good fees with fund managers and increasingly get much more involved in direct investments has been a real sort of positive. That it's a kind of real positive journey that Nest has gone on over the last 10 years.
Yeah, I think when we talk about the kind of things that people are invested in, or you're invested in as a provider here, because obviously part of the campaign with you is to kind of highlight to people that your pension is invested in everyday companies that you encounter every day, things that you may not necessarily think about. Because part of me still feels as though with a pension, it's changed now. It used to be something that, documentation went into a drawer and you forget about it. Now you do have access to it online. You can see it. So it's more kind of like present, tangible. You can at least see it, look at what you've got. But I feel like in the background still, there's this, well, where does the money kind of go? And it's interesting to hear you talk about diversification and, wind farms, that kind of stuff. Because I feel like, wind farms and clean energy, is kind of a really big issue for our world moving forward, and certainly for the country moving forward. So to know that you're invested in those types of things for the benefit of the economy, the benefit of community, of country, society, I think that's a really powerful message to convey to people who are nest holders.
Yeah, I think that's absolutely true, and I think just to kind of build on that point, when we've done research in the past about what do people think of pensions and what do people think of investments, it all seems it's a bit scary. It's something that
Hmm.
happens to other people, and I think what we're trying to kind of make clear is it's like, this is your money. Like, you own these companies. You have a say in the companies and how they're run. You have a say in terms of how we do an energy transition in the UK. It could be done in a way that is really beneficial to jobs, or it could be done in a way that's not great and it's just outsourcing jobs elsewhere. And I think one of the things that the Nest can do on behalf of 13 million members. That's a big part of the UK kind of
It's a big
population
number.
and
Yeah.
the UK
Yeah.
workforce. It is giving people a sense of kind of ownership of the economy as well, and that the economy isn't something that just happens to you, and that you're not just a consumer or a worker. You're also now an owner as well, and that gives you kind of rights and opportunities to make the economy work for you and your community, not for somebody elsewhere. And then I think kind of Nest as a kind of a not-for-profit organisation, our entire kind of ethos is how do we get the best for our members. I think that's quite powerful in sort of engendering confidence and not seeing investment as just something that people do in London or in the city or in
Yeah.
kind of financial capitals, that it's all very kind of exclusive and you're not welcome there. It's like, no, this
Yeah.
is your money.
It's for everyone. Yeah.
Where does it go, and how does this benefit you? We've found that to be quite a powerful message to generate kind of engagement and trust, because I think trust is a key thing. I mean, if you've been
Trust
working
is
in
very important.
financial
Yeah.
services for a long time, there is a genuine issue about trust and stuff, and how do we rebuild that to make people understand that investing isn't a dirty word. It should be a positive thing, um, that is actually, you know, much better for most people than putting your money under the mattress,
Under the
um,
mattress. Yeah.
or sticking it in a bank account if it's going to be for a long term. Because the difference in terms of the returns you should reasonably expect if you're investing over the long term versus just putting it in a building society or something is huge.
Hmm.
And the challenges of trying to keep pace with inflation, it's just very difficult to do that if you're putting that into savings accounts, and that's the power of investing. But we do kind of recognise that this is all quite new for a lot of people, and how do we communicate that? How do we be as transparent as possible? So a good example of that is people can go onto our website and see where their money's being invested. You can see which companies we're kind of buying with our fund managers on behalf of them. And again, I think that's a powerful. We're not expecting everybody to become kind of expert investors, but I think there's a duty on us, you know, to be open and transparent about where
Yeah.
that money is going. And I think
Yeah.
that's all part of kind of building trust and confidence.
Yeah. I think education is a huge part of this, because I think you're right. There is still this notion that it is for a certain segment of society. That isn't true anymore. And I think for you guys at Nest, being not for profit in itself is a big tick in the box, because you spoke about trust. I've been in the industry long enough to know that people are very distrusting and thinking that, you know, organizations, providers will only do things because they make profit out of it. So not being not for profit, I should say, is a really big tick. And you to expand on that a little bit more, just for the understanding of people who may be watching and listening to this.
Yeah, I mean, I think the phrase we use is kind of profit for members. That, you know, our aim is to get the best deals when we're working with our kind of fund managers and things. and that allows us to have a more sophisticated investment kind of strategy. It allows us to be um, is to get into investments that are traditionally kind of not accessible to people on kind of lower to median incomes, which is the vast
Hmm.
majority of our membership. So for example, kind of more recently, we've started investing in private equity. 3 or 4 years ago, when we said we wanted to invest in private equity, the traditional industry response would be, well, you'd never be able to afford it because private equity managers expect kind of fee structures in certain ways.
Yeah.
But our take is, well, what do people with very, very kind of high net worth individuals, where are they putting their money? It's in things like private equity or equity infrastructure, which um, have traditionally been very expensive ways of investing. But there's a reason why they're very expensive, is because they generate um, better returns, more stable returns. It gives you access to parts of the market that are not traditionally available to other people. But because of our kind of increased scale, because we've got all of these members and things, and because of our kind of focus on driving down costs, we have managed to start kind of moving into the private equity without paying these high fees, because fund managers want to work with us. We're one of the fastest growing pension schemes in the country. We're going to be one of the biggest pension schemes by assets under management kind of in Europe, not too far away. And this just gives, it's that kind of that power of collectivism of when you can bring kind of lots of people together and lots of money, you can drive kind of more competitive fees and
Yeah.
get access to things that on your own you'd really struggle to get access
Yeah.
to unless you've got an enormous amount of money.
Absolutely. Obviously, we live in an age where there's rapidly changing economic landscapes. How does Nest change and adapt the investment strategy to ensure that you're able to get the best for your members?
Yeah, I mean, I think one of the key things is that kind of diversification. Nobody has a crystal. If you had a crystal ball and you knew how successful all companies were going to be, or all investments and stuff, um, that would be a much easier kind of proposition. So one of the key things is making sure we're tapping into all different parts of the economy. So there'll be times when, I mean, we're just seeing quite a lot of kind of volatility kind of recently in
Yeah.
US and European and Japanese kind of markets. Um, and things go in cycles. But the important things of diversification is, or the aim of diversification is, that when some asset classes are doing really well, other asset classes might not be doing so well. But if you've got a kind of a broad spread, that's really powerful. The other thing is, just because we are so long term, we should, or our members should, be rewarded for that kind of long term investment horizon. So we can lock up money in quite illiquid kind of assets. So, a really good example would be like a wind farm or something. You can't sell a wind
Hmm.
farm on a daily basis. You're buying into that. You'd expect to hold that for a long time. You should get rewarded by tying up your money for that. So our members are really benefiting from that ability to take long-term kind of investment decisions, because we'll be looking after their money for some of our members. It could be 60 or 70 years into the future
Yeah.
that we're
Yeah.
investing. And that's a really powerful kind of driver for returns, but also kind of seeing your way through these kind of different economic cycles. That um, we're not trying to judge every twist and turn of markets. That's not really kind of our jobs or our skill set. We're trying to think about what are going to be the long-term drivers of economic growth, which is why something like kind of climate change is a really obvious thing that we spend a lot of time kind of thinking about, and what are the implications for the economy, and how can we position our portfolios for our members, one, to take advantages of the opportunities of this transition from a very carbon intensive world to a very low carbon world in the future. Huge opportunities in things like battery storage, energy transmission, renewables. There are massive things that if we can deploy our members' money there, they can take advantage of that shift. But then also thinking about all of the risks involved with that what climate change could mean, whether they're physical risks, increases in floods, increases in severe weather events, how are the assets we're investing in, how are they kind of positioned? And again, because we're getting bigger and we can kind of spend more time kind of researching and thinking about the long-term implications, we would like to think we can position ourselves in a more advantageous way for our members than somebody who's perhaps smaller or doesn't have the same resources. So I think they're the kind of key things, is that we spend a lot of time thinking about not what's happening tomorrow, but what do we think is happening in 3 years, 5 years, 10 years, 20 years.
Into the future.
And how we can manage the risks, but also kind of tap into what could be huge opportunities there as well.
Yeah, I love the conversation around diversification. It's one of the things that I always talk about when it comes to investing. Like, it is partly looking at obviously where we are now, present obviously being the main thing, but you are invested for the long term. What you described there, it sounds like there's a lot of work that goes into it. Describe what that kind of looks like behind the scenes when you're looking at these future projects and opportunities potentially.
Yeah, so I think so some of the key things we've been doing kind of recently, we've invested in some big equity infrastructure projects. So we're heavily invested in some of the Hornsey kind of wind farms off the kind of east coast of England. So that's like a huge opportunity to benefit from that. It's a big transition to the amount of electricity that's generated in the UK from renewables compared to 10 years ago. I mean, I've been working here for more than 10 years, and the projections for how quickly renewables would kind of spin up completely underestimated just how quickly that transition could happen. So that's one really good example. I think something else, nearly half of our money is invested in kind of big companies globally, sort of around the world. And we've got, rather than trying to kind of pick winners and losers, we invest in kind of like in a broad sort of market cap way, but we have quite an advanced kind of tilt towards those companies that are well positioned to manage the kind of transition to a low carbon economy, and away from those companies that aren't well positioned. That doesn't mean we're not investing in companies that have exposure to fossil fuels, but we're investing in those companies who do have exposure to fossil fuels, who've got a clear transition path to how they're going to operate in a world in which they will be penalised, whether that's through higher kind of carbon kind of prices, or just because they become stranded assets because nobody needs that coal or that oil because it's being kind of provided elsewhere. So it's a forward-looking strategy. It's not looking backwards to see who is the worst emitter. It's trying to find companies that have got a plan and are executing on that plan, and we want to reward those companies and then avoid those companies which may have good business reasons for they want to make short-term profits and stuff, and they're not really thinking about the long-term future. And there may be a good reason for that. We may disagree with those reasons, but in terms of our kind of our focus, we're more interested in the long term. So which companies are going to be successful, not for the next 6 months or 12 months, but for the next 5 years, 10 years, 15 years, 20 years.
Yeah.
Another part of that is, as we're a significant part of the pensions landscape in the UK. We also have influence when we're speaking with regulators or standard setters about giving signals to both companies, but also to governments around the world or to regulators around the world, the kinds of things that we want to see kind of promoted in terms of either incentives or regulation, and the kind of activities that we want to see that we don't think is kind of wealth creating. So we do lots of kind of work about the importance of kind of diversity on boards. We've seen lots of evidence to suggest that those companies that have broad diversity in terms of the people who are running those companies, on the whole, tend to be more successful over the long term.
Yeah.
How can we encourage companies who are investing in to take that on board, and those ones where they're struggling, can we engage with them to talk about best practice? Can we work with regulators to tighten standards in some areas or change standards in other areas? So being a global investor, and we are invested in kind of things, all sorts of things, we kind of try and avoid the approach where, we just don't like that, we won't invest in it, because that isn't actually changing the world, or it's not having an impact in terms of what we're trying to achieve. We're interested in companies being successful, but being successful in the long term, and we're interested in companies, their activities not having a detrimental effect on other companies we own or other assets we own, and just thinking about the phrase is kind of this universal owner concept, that we don't just want to feel good about ourselves because we're not doing something. We want positive real world impact in terms of our investment activities.
Yeah. And I think if you're listening to this or watching this on YouTube, I think it's really important to understand the point that Paul's just making there, because oftentimes it's very easy to feel as though your money isn't actually doing good in the world. And the beauty of having Nest, for example, in this equation, is that it's not just about putting the money in places where it has the ability to grow for the future. It's about influencing policy. It's influencing what happens next, because at the scale that you get to when you have 40 billion under management, you have clout. And typically with companies looking for inward investment, they're more likely to introduce new policies because investors want a certain direction of travel. So it's a real nice way for you to think about your money and how it's being used, and how it's being used to influence the world for better. Because as we move forward in the world, nothing ever remains the same. Change comes along, and it's easier to maybe lobby governments and make changes within structures and organizations when there's a little bit of money behind it, and companies like Nest actually help advocate for certain policy changes, so on and so forth. With that, Paul, what kind of choices do Nest members have when it comes to their pensions?
So a big part of the automatic enrollment legislation, because people are going to be automatically enrolled into a pension scheme, there was a nervousness, I think, when they were setting the policy, that people would just feel a bit paralysed about. They weren't sure about how to invest their money and what would happen with it. So all pension schemes who are involved in automatic enrollment have to have a investment strategy that everybody goes into without them having to make a choice. And in the legislation, it's called a default investment strategy. Fund. So the vast majority of our kind of members are in our kind of default investment strategy, which is made up of kind of 50 different target date funds, one for every year that people could retire in. But sitting around that, because some people will want to get much more involved in how their money is invested, we have some fund choices as well. So people can invest kind of differently from the default strategy. So we've got an ethical fund, which is, so our default strategy, we would say, is quite ethical, but this has got like some very, very kind of like specific things that from research into some of our membership, that people are very, very nervous about kind of investing. So some people do want to be completely fossil free. Some people will want to make sure their investments aren't going into certain kind of types of activity, whether it's kind of gambling or other things that perhaps in the past were traditionally called kind of sin stocks or something. We also have a Sharia fund. We did quite a bit of research, particularly into our employers, particularly those employers who might have kind of large workforces with large kind of Muslim workforces, where they were concerned that they would be automatically enrolling some of their workforce into a fund that didn't meet certain Islamic investment principles. We have a higher risk fund, which, the name kind of says what it does. It's taking more investment risk with the hope for achieving kind of higher return. And then we also have a kind of a really kind of a low risk fund, which we call a lower growth fund. And we called it a lower growth fund to make that point really, really clear, that it may have kind of less kind of volatility in terms of ups and downs, but it won't grow anywhere near as quickly as the default strategy. And now, of those kind of 13 million members, I think 98 point something percent of our membership are in the default strategy, which we're pretty comfortable with. It's kind of that's where the vast majority of the money is, which means that could be the most sophisticated and I think kind of managed part of our overall portfolio. But we're also really keen that just because you've made a fund choice, we still have a real duty of care to you. So we try and provide diversification in the ethical fund. The higher risk fund is well diversified. We're looking to find ways of getting some more diversification into the Sharia fund as well and stuff. So it's a little bit like we talked about earlier about automatic enrollment. Like people really like the idea of something kind of being done and having confidence that people are doing the right thing by them, but people like choice. That doesn't mean they necessarily want to exercise that choice, but people don't like being told you have no choice. And I think having a sort of a broad set of quite different funds away from the default fund is quite powerful, so people feel they have options. What we wanted to avoid, which we've seen a lot of research into, is if you give people hundreds of choices, you're actually kind of people just get paralyzed by
decisions. The decision is so much harder to make.
And then people end up not making a choice because they're so worried about kind of getting it wrong or doing so. So I think it's getting that balance right where you give genuine choice, things being really, really different, without overwhelming people with thousands of things which give the illusion of choice, but actually are probably very similar and just maybe packaged up with kind of different kind of marketing approaches and things like that.
Yeah. What would be your best tip for pension members, or Nest members, I should say, to get the best out of their Nest pension?
I think the number one thing is, if you can, be persistent in your kind of contributions. And I recognise that, particularly with kind of cost of living crisis and stuff, that there may be some good reasons why people can't afford to save. But the benefits of the employer contribution and then all of the investment return we can generate, particularly kind of over a long term, kind of starting saving and continuing saving, that's incredibly powerful. And then I think the second thing is, particularly as people are getting older, starting to engage a bit more about how you might want to access or when you might want to access your pension is really, really important and can be really, really powerful. And we have options to support people in kind of making those kind of choices, but also we provide kind of an income solution if people want an income solution as well. And we're spending a lot of time and resource in terms of trying to develop that even further, because our membership, a lot of our members are quite young, but we still have lots of members who are coming up to retirement. So I think they're the kind of the sort of two key things in terms of getting kind of better outcomes is save for as long as you can and be persistent, and then be really, really kind of clear about how you want to access your money and how long that needs to last and whether you need to kind of work longer and things like that. And then potentially, if people want to consolidate their pots and bring kind of things together in the same place, and that can be kind of beneficial as well, rather than having hundreds of things all over the place where it may be difficult to keep track, or you may be paying all sorts of different charges and things like that. I mean, one of the key things about Nest is our aim is to be, kind of a low cost but high value scheme, because if you're paying out a lot in charges, whether they're administration charges or fund management charges, that can really erode your final outcomes. So understanding whether you're getting good value, I think, is going to be increasingly important, as people's savings, could continue to grow, because automatic enrolment's kind of 12 years old now, so it's got off to a great start, but there's a long way to go for people to really kind of like start getting the full benefits.
Yeah, I love the first tip that you gave there in terms of persistency of contributions, because I think that's really, really powerful, especially for younger people, being in a position where you take that first step and you cultivate the habit of money going in, because then you really have the power of compound interest working in your favor as well. I did see something, it was about 2, maybe 3 weeks ago now, and you mentioned the cost of living there, where it's might be a little bit more difficult for people to pay into their pensions now because of the cost of living and that financial adjustment there. And the stat was that there was an increase in the number of people who would reduced or not paying enough into their pension, and it meant that certainly people on track to have less potentially when they retire. I was going to ask you, have you seen that within the Nest contributions because of the cost of living crisis, contributions being reduced? Have you spotted that as a trend?
So we've been keeping a really, really close eye on this, because for exactly the reasons you talked about, that the big gaps in your kind of savings history can have quite severe impacts. We've been surprised that there hasn't been that much change. So the stats we've seen is that the people are kind of remaining kind of persistent. I think some of our nervousness might be we're starting to think a lot more about people's overall kind of financial kind of well-being. It's not just about good outcomes at the very end, and there'd be nervousness about how people are kind of having to fund day-to-day kind of expenditure and things like that. But we've not seen like a sharp spike in people either opting out or stopping kind of contributing. And I think as inflation's starting to come down, whether or not we would see kind of any changes, whether there's a lag in this is still something we're keeping a kind of close eye on.
Yeah, that's really good to hear, because I think ultimately, I mean, it's great just to have it there as something that, again, is cultivating the habit, making sure that it's going in, so you've got something working for you for the future. Talking about investing and everyday companies and brands, there are a lot of pension myths, and I've come across quite a few of them in my time. What would be the one myth that you wish that you could do away with if you could, in a moment and at a moment's notice?
I mean, I think I've touched on it a bit. I think it's that idea that, I mean, when we've done kind of like survey work with our kind of membership, and you ask people about investment, they kind of talk about people with kind of bowler hats or kind of Wolf of Wall Street, or that kind of attitude that it's somebody else in the city who are a bit don't care about me, and they're just care about making lots of money for themselves. And I think one of the myths we kind of want to explode is it's not other people, it's like you're an investor now, and that can be a really, really positive thing. This is not about kind of doing people over. It's about positive contributions to company's success, which then gives more money back to you and things. So this campaign we've been running about being an everyday investor, and really trying to demonstrate to people kind of real tangible things. So we took a good example of this. We took and there's a video on our website. We took some Nest members who live in Grimsby, which is on the East Coast, out on a boat to see the wind farm that their money has, is
help build
and help maintain. And it was just like a fantastic kind of trip, and people were going, well, I hadn't really thought of myself as an investor, but you get out here and you see these huge things that are they're generating kind of clean energy. That's a good thing and stuff. Hopefully that's going to bring down kind of energy bills, which is helpful for them in their kind of local community in terms of paying their energy bills. But the important thing is it's generating kind of money for them, and it's kind of this win-win of not only are you making money, every time one of those turbines goes round, that's making you money for your retirement. It's also having a positive effect on kind of jobs in the local area. It's having a positive effect on on the ability to kind of mitigate the kind of climate change in the future. And that was really, really powerful. And people kind of came away from that with saying, I never thought of myself as an investor, but now I kind of get it. It's much more tangible. And then we did something else kind of recently where we got some of our members together and we were, through somebody from social media doing some kind of cooking and things like that. And at the end kind of said, oh yeah, and everything you've been cooking with, you own some of that. You've got shares in the company that makes Oreo cookies. This is all part of the things that you own. And it's that idea that everything, well, not everything, but lots of things that you can touch in your day-to-day life, that could be part of your investment portfolio. And that doing well or doing badly will be important for your retirement. But it's not somebody else. It's you. You're an investor. And I think that's quite a powerful message.
Well, it's empowering, isn't it, at the end of the day? And I think that's one of the big things that, when I was speaking to Abby about, potentially doing something on a campaign with you guys, is like, we don't often, I mean, my background, I knew nothing about investments growing up, nothing at all. Like I said, the first time that I realized that a pension was something that my dad referred to when I was like 17 years old was in 2012. And at that point, I was in my early 30s. So that was the first time I had a real realization of pensions and investing as a thing. And just to know that when you go shopping at Sainsbury's, well, actually, that might be in your pension portfolio, Sainsbury's itself. The fact that you might go pick up sugar and Oreos and all of these different things off the shelf, those companies are likely going to be in your pension portfolio. And it makes it a lot more tangible, makes it a lot more real in terms of, I know where my money's going. I use these products every day. I use these services every day. So you're helping yourself, you're helping the community, you're helping that company, you're also helping other people who also invest along you. So it's empowering in more ways than one, with knowing that just being an everyday investor via your Nest pension or your pensions or your investments in general is something that you had going for you that you didn't really necessarily realize.
Yeah, and the feedback we've had from people has been really, really powerful. I mean, it's that kind of, people get quite nervous and a bit scared about kind of particularly long-term kind of complex kind of financial things, because it's just not part of people's day-to-day experience.
Mm-hmm.
And I think, and there's probably a lot of, there's a lot of people who are quite interested in people not really understanding these things and making it seem more complex than it is. And it kind of, to your point, it's disempowering, and so people feel kind of quite vulnerable and things. And if we can kind of break down that kind of nervousness about this, that this isn't incredibly complex that only certain people can be involved in. I mean, we're not trying to make people expert investors, but if people want to know where their money is going and want to be part of that kind of that dialogue about what we do with their money, I think that's a really powerful thing for us.
Absolutely.
When we go and engage with companies, or when we go engage with regulators, if we can say, well, we've got 13 million people who have an interest in how this works. That's not some abstract kind of moving things around kind of spreadsheets. This is real people's lives, and the decisions we make on their behalf are really, really, really important, and have real world impacts beyond just kind of making them. I mean, fundamentally, our aim is to make our members as much money as possible, but there are ways of doing that, and then there are ways of kind of bringing people with us on that journey. And I think that's a powerful thing that automatic enrollment and the role that Nest can play in that. I think we've got a good story to tell. Part of the question is telling that story and
Yeah.
trying to reach people as much as possible.
Absolutely. I'm a firm believer still, and it's the reason why I do what I do now, is that it's all about education and making it accessible. To what you said before, you're very, very right. I feel like it has always been this thing of it's certain type of people, but I feel certainly on my journey, the people that inspired me the most was realizing that actually this person is just like me. And I think that's part of the battle. And I really appreciate you having this chat with me here. What is there any kind of like final kind of message or word that you want to leave with the viewers and the watchers of the episode? Anything you want them to do or you would encourage them to do?
The only thing I would say is, if you've got a nest pension, it's kind of worth logging on, seeing, what where your money is invested. You can kind of have a look at that and stuff. And I think you don't have to get engaged and do lots of things, but just having a bit more of an understanding, I think, will help kind of in the longer term when there are decisions to be made about how you want to, take an income in retirement and things. And then the other thing is, we just encourage people to stay saving. For most people, most of the time, it's going to be a good thing, and will have positive impacts for them kind of throughout their lives, not just at retirement.
Absolutely. Absolutely. I want to finish this episode on just a note that maybe you may have spotted on my channel. I think it's about a couple of months ago now. I was invited to 11 Downing Street, and we were there to speak to Jeremy Hunt. And one of the fantastic questions that was asked in the session that we had with him was, what is the government doing to help remove the barriers for people to invest? And what he went to first was, he goes, I think we need to take a step back and talk about why people should invest. And the reason that he led with, which is absolutely true and speaks and connects quite well to this conversation, is we need to get people to be empowered enough to take control of how they are going to cater to their retirement plans in the future, to reduce the reliance on the state. And that's kind of what auto enrollment was all about. And I found that answer to that question really, really interesting and really, really telling. And it's why I talk about pensions and investments so much, because I think there is power in taking charge. And gone are the days where you have to be the expert, where you have to know how to do it all on your own. Companies like Nest are there to be your custodians, your ushers, if you will, to look after things and do things on your behalf. All you have to do is make the decision to contribute. And I think that's the biggest thing that I want you to take away from this episode. It is not meant for, the ayatollahs of society. It's meant for everyone. And your money is being put to really good use for the benefit of the country, community, society, the world, and more importantly, for your future as well. So if you do have a Nest pension, go check it out. Just go signing. If you've not signed in, go signing. I've got one. Like I said, my company contributes into a Nest pension for me personally. So go sign in. It is really, really simple to do. Having eyeballs on this is something that you just realize, actually, it's done quite well, actually. It's quite nice to see that number. And when you log in, maybe you might review it once a year, at least you know what it is that you're doing, and you know that you're doing something positive for the future as well. But I want to say thank you to Paul for joining me, and I hope you've enjoyed this episode. Any questions, any comments, I'd love for you to leave them in the comments down below on YouTube or in the show notes. You're going to have links as well. I'm going to link to pension, but reach out to me if you have any questions, any thoughts. Thank you so much for listening, and thank you so much for watching. Until next time, catch you later.